Hello everyone, welcome to another live stream. So we had a big event, which is of course the US elections, and Trump has won. So we have had a nice reaction in the markets. When did it happen? As you can see, it didn't happen right when the bubble was there. So when the TradingView bubble was there. The reason is you never know with the votes. So especially with the US election, the votes keep coming in. They are being counted for quite a while. So the initial spike on the euro and the US dollar was actually to the upside, a little bit of a spike. So we were building some bullish pressure, meaning the dollar was actually losing strength. And then right around midnight, I believe this is London time. Yes, so this chart is London time. Right around midnight London time, we had a massive sell-off on the euro and US dollar, and actually on most of the dollar pairs. So basically, that sell-off. Sorry, I was getting a call. Led to a massive drop, and the same thing happened on the Aussie and the US dollar and the pound and the US dollar. Just give me 1 second. Okay, let's get back to the charts. Basically a meltdown, and the JPY pairs kind of kept being stagnant, kept being flat. We got a reaction definitely on EU, on AU, on GU. Stocks went up as well. We're gonna go through that. Bitcoin broke the major high. I think it is now trading. Yeah, it's trading at an all-time high, which is absolutely amazing. Quite surprising as well. I mean, it's not surprising if you're in the crypto space, but for me, this does look a bit surprising. Ethereum is gonna follow pretty. Okay, Ethereum is not following currently, but I think it's gonna follow in the next couple of weeks. Now, what does this mean? So what does a Trump win mean from the markets? Well, let me show you some fundamental analysis, which I follow. So let's stop sharing this screen and actually let's start sharing a different one. So I want to show you some fundamentals. Where is it? Let's see if I can share it. Let's make the window smaller. Let's click on present, share screen, share screen. US presidential elections. Okay, yeah, this is it. This is what I wanted to show you. So this is what I look at for fundamental news, okay? This may look familiar because this is actually the guy behind Thales. So from Darwinex, okay? That is the guy. Is it this window or is it the next one? I'm not sure. Let me check. Okay, so this is the window right here. So this is the THA guy, the Thales research guy from Darwinex, and he has a very good fundamental analysis. So I want to show you this. Basically, he has these scenarios. This is what you want to see. So scenarios, 4 scenarios. It was a Trump victory, but no sweep. Trump's victory and Trump sweep, or Republican sweep. Then you had a Kamala Harris victory, but no sweep. And then you had Kamala Harris victory and a Democrat sweep of the House. So what happened is the Trump victory happened as well as a Republican sweep of the House. So basically Trump won everything, all three parts. That is how the US legislation is divided, okay? Or the US government is divided in 3 parts. I'm not that proficient in it, but again, there's not only the presidency, but there's also the House. You have the the Senate, basically, senators, then you have the congressmen. So you have the Congress, so you have the presidency, you have the Senate, and you have the Congress. And the Republicans won everything. Trump won as well. So the case is here that as you can see, expected Forex market reaction, the dollar gets stronger by 100 to 150 points. And once the sweep is confirmed, which it is confirmed, dollar stays strong. Trump with a sweep is particularly negative for the JPY. So that is kind of the fundamental analysis. Okay. Let me get back to my screen. Stop sharing. And let's get back to trading view. Window, trading view. So we're back on trading view. The move we got was bigger than the forecast from Thales. It was around 200 pips. So he said 100 to 150. It was a bit bigger, but yes, the dollar definitely gained strength, especially if you look at the DXY, the dollar index. So yeah, that move did happen. Now, what also he wrote down is that the JPY pairs will be gaining strength as the JPY is losing strength. So he expects possibly something like this to happen. Okay. For us, that is great because we are, of course, searching for trends. That is what we look at least that's what I look at. I am a trend trader. So if we can get a nice downtrend on the dollar pairs as the dollar keeps gaining strength, and if we can get a nice uptrend on the JPY pairs as the Japanese yen keeps gaining strength, that would be pretty great. But I'm not going to do anything unless I get the evidence. So if you guys are wondering, I did not trade the US elections. That's something I don't do as a swing trader. For scalpers, for day traders, there were for sure some opportunities. If you go, let's say, to the 5-minute on the euro and the US dollar, because fundamentally a drop was expected, once the Trump victory was confirmed at around midnight London time, you could have found this impulse right here and then possibly sold after getting this sort of a setup, which is a break and retest. Of course, I would make a play here by placing a sell limit, but you could have gone in with a market order. And this would be a pretty high probability play, I'm not going to lie, a pretty high probability trade. For me, I trade on the 1-hour chart. I'm a swing trader, so this didn't fit the plan, and I decided not to trade through the elections. From the last live stream that we had, I'm trying to see if there were any opportunities. There were none, to be honest with you. We did have NFP, didn't we? Yeah, we did have NFP. So the NFP was pretty much interesting. It was very interesting. It came in at 12. The forecast was 113. So the actual number came in much lower than the forecast. And you can see the dollar started losing strength, but then also gaining strength. So nothing really came out of it. I think people were more focused on the US elections. And the price action that you can expect before an elections is, of course, this sort of flat price action that you were seeing right here. So kind of quieter price action, and then you get the big move, as you can identify it there. So I didn't take any trades in the last week on the euro and the US dollar. Nothing really fit the plan. And now I'm going to need to reevaluate, okay? Because we got that drop. Now this is starting to look like it is slowing down, actually. So I'm starting to see a bit of a slowdown on the bottom. I would have preferred to see momentum kick in, very strong momentum kick in like this. That would definitely have fit the plan, but that unfortunately didn't happen. Instead, we're starting to get a bit of a descending channel, which is a bullish pattern. So I will put this pair on the watch list because it is moving. It is looking interesting. But for a sell setup, I would like to see that strong bearish momentum kick back in with a nice large impulse, and then I would look for a sell setup. I think the stop loss of 10 pips is far too small. So I would need to go in at least with a 20 pip stop loss. I would need to do at least a 20 pip stop loss because I'm using just a simple visual assessment for assessing the stop loss size. So 10 pips in this current volatile conditions is too small, but 20 pips looks pretty good. So 20 pips is going to work for me. That is about it. Of course, if the price does decide to descend here, show me a nice clean descending, a bit of a larger descending channel, that is actually a bullish pattern in my book, and I'm going to look for that push up, and then I'm going to look for buy setups. That is going to be a play for me. So now you know what I need to look for sell setups and what I need to look for buy setups. If none of the two scenarios play out as I have forecasted, then I'm going to be more patient. I'm just going to sit on my hands. That's about it for the euro and US dollar. Euro Japanese yen is unfortunately still remaining very, very flat. So I did mention that the fundamental analysis for the euro and the Japanese yen, for a Trump win with a Republican sweep, the forecast is for EJ to go up. Okay, for the JPY to lose strength, but of course we need the signature in the markets, and I'm a technical trader. I'm focusing on the technicals. So my main criteria for entering trades comes from the technicals, and this is just looking very, very flat. It's not going to go on the watch list. I will remain patient and I will look for just a large push up or just a large push down. Okay, that is about it for the euro and the Japanese yen. Aussie US dollar looks pretty similar to the euro and the US dollar. Now, we did analyze prior elections, I think prior 4 elections. If you go to my YouTube channel, search for the last video that I uploaded, and it's going to be an analysis of the 2008, 2012, 2016, and 2020 elections. Most of the time, you get a V reversal, either a V reversal or an inverse V reversal. This time, you got an inverse V reversal, for example, and then the drop actually did continue. Just by going over the prior price action from the last week, from the last live stream, I didn't take anything. So I didn't take any trades. If you are trading with me and you have prop firm accounts, make sure to put in a 0.01 lot trade. Otherwise, you will get your account taken away from you because of basically because you didn't place a trade. Okay, because you didn't place a trade, you will get your account taken away. There's a 30-day inactivity rule, especially for Alpha Capital, I think for FTMO as well. But basically, if you don't place a trade in a 30-day period, they take your account away from you. So if you're in that boat, if you haven't taken a trade for a long time, I highly suggest placing a 0.01 lot just for that inactivity rule. So we opened this week with quite a big gap. EU also had a bit of a gap, but AU had an even bigger gap. So what is it, 50 pips? That is pretty massive. Okay, that's a pretty massive gap. And then we had our kind of slowdown before the elections. Then things started to cook up a little bit. Price started trickling up. Here, was he looking for any entries? I would be looking for entries. For example, this looked okay, not that good, but it looked interesting. Of course, because of elections, I didn't take it. Here, I was looking at this as well. This looked interesting, but it was Tuesday, and again, because of elections, I didn't want to have that risk running in the market, so I did stay out of all potential setups. Nothing really looked super clean, nothing really looked super high probability, and then we had a massive drop of, what is it, 200 pips? Okay, it's not 200, it's 122 pips. And then a massive retrace as well, so not the best sign. Usually when you get this price action, you unfortunately get a range. So this pair will not go on the watch list. This is not looking that good, have to be honest with you. I don't really like this price action. I am a bit worried that we shall be stagnant right here. That is a worry of mine, but I will remain patient. I have the trending entries. I have the range bound entries as well. So for the trending entries, I'm gonna need to get a large push up or a large push down like this. For the range bound entries, I'm gonna need to get a bigger range right here. I'm gonna need a bigger range, okay? And then I'm gonna be looking, let's put it back actually, back. And then I will be looking for liquidity sweeps, okay? Sweep of this area, sweep of this area, above. I'm gonna be looking for this trade, buying the bottom, maybe having a bigger stop loss if it visually looks small, or selling the top like this. Okay, let's say 10 pips. So that is gonna be a range bound play on the Aussie and the US dollar. I'm gonna be more patient. So this week, I don't think we're gonna get any entries. Today is Wednesday. It's kind of late Wednesday for me, at least. Not looking the best. We do have a news event, don't we? So we have the Fed interest rate decision. Very, very interesting. That is a pretty volatile event. That is a pretty volatile event, and I can guarantee that the Fed was looking at Trump. The Fed was looking at who will win the election, because Trump tends to be a big spender. Trump tends to spark maybe some inflation because he will spend a lot of money. So the Fed needs to control inflation. So they may need to play with the interest rates, and we may get a big shock. We may get a big shock with the actual number. We're going to see. Of course, we love volatility. At least I like volatility. So if we can get a nice, interesting number, spark a trend up, spark a trend down, that would be pretty good for me. But currently not on the watch list. Let's see how that will develop. When is that news? So it is on the 7th of November, which is Thursday. Okay, so it's basically tomorrow. Pretty late tomorrow. So it's going to be at 7 p.m. Actually, yeah, 7 p.m. my time. Why so late? I don't get it, but I guess it's because it's American. But I would have liked it to be at, let's say, 3 or 4 p.m. my time, but that's okay. Aussie and the Japanese yen. So this one is pretty range bound. Same as the euro and the Japanese yen. Now we did have a little bit of interesting price action right here, just a little bit of interesting price action with the V reversal, which is a high probability bullish pattern. But again, overall price action was pretty shitty, pretty flat, pretty corrective, especially if you zoom out a lot. This looks really, really flat. Okay, this is looking really, really flat. I don't like it. And nothing really came out of this formation. We're going to play it now. See, nothing really came out of it. We had some shifts in momentum. We had some big red candles. Not the best, not the best. So on AJ, I will remain patient. My forecast is I'm just looking for a large push up or a large push down. Very simple for the Aussie and the Japanese yen. That is going to be it. Now, for the overall range, for the trades that I have taken from the last live stream, I haven't taken any. I mean, the pair was just extremely range bound. Here we had a bit of bearish momentum, but other than that, this was just very, very flat, very, very range bound. So it really wasn't interesting to me. I didn't take anything. I think we can move on pretty quickly from this one. It's just not printing anything. Pound US dollar looking interesting right now. It's looking interesting right now. Yeah, this is very interesting. So let me first comment, did I take any trades last week? No, but I was definitely looking at the pound. First, I was looking at the pound right here for sell setups. For me, I saw a bit of a bullish pattern in this ascending channel, and I saw strong selling pressure here. So we have the bearish pattern. We have the bearish pattern, ascending channel. We have the large drop, large momentum. I was looking for sell setups. Then this happened. That's a bad story. After that, I wasn't looking for anything. Okay. Then we had another opportunity right here. This was pretty interesting. This was some massive momentum, massive sell-off. I think it was connected with, wasn't there some pound news? The GDP growth rate? Okay, but that was before. Let me see. Yeah, so this, I don't know why it happened. I'm not sure, maybe because of these news, doesn't really matter for me. I saw some nice selling pressure. I saw a nice push down. I was looking for an entry setup, nice flag or a nice break and a retest. Whoop. Didn't happen. Okay. We did get a flag, but this flag didn't fit the plan. Too much buying pressure inside of this flag. Okay, I didn't like this flag because it had just too much buying pressure right here. The blue candles were just too big for me. What I would have liked, what would have fit the plan actually, is something like this. So a nice flat range that lasts for quite a while, break of that high, retrace, and then you would have the flag formation. You would have the first low, first high, second low, second high. That would be pretty nice, pretty interesting. So yeah, the entry did not fit the plan. Too many warning signs in the actual entry. What happened next? Well, we opened up with a gap. 52 pips, not that big, not as big as the Aussie and the US dollar. Broke out of the range, had a little bit of an ascending, but again, this was just before the elections, just before the actual realization that Trump is going to win. And then we had a massive sell-off right here. Okay, so we had a massive sell-off, as on all of the dollar pairs. Starting to slow down now. So starting to print a descending channel, which is actually a bullish pattern. Also, one more thing, we have broken into this major low. Hey, Charles, what's up? Charles says, my God, what is going on with the charts? So it is the US elections. And it's like this all the time. Basically, every single election is pretty volatile. You get a lot of movement, but don't be afraid. It's going to calm down in the next few hours or the next few days or the next few weeks. Until it does calm down, I would recommend everyone who is new to trading to be more patient, sit on your hands, don't force any trades, don't take any unnecessary setups, unnecessary trades, unless you see like a 10 out of 10 no-brainer trending setup. So this requires patience. Especially what I would advise is for you guys to wait out this news. Okay, wait out the Fed interest rate decision. That is usually pretty volatile. So tomorrow, just maybe stay out of any potential setups unless it's like a 10 out of 10 super setup. I would wait for Thursday, and then on Friday you could start maybe really actively monitoring for looking for trades. Again, this week really volatile. We had some big news events. We had non-farm payrolls last week, didn't we? Where is the non-farm payrolls? So it's supposed to be here. Yeah, okay, so we had, see, only in just 7 days, we had the unemployment rate, huge news. Non-farm payrolls, huge news. US elections, massive news. Then we have the Fed interest rate decision, massive news as well. So when the market is full of news, you wait, you sit in your hands, and you wait for the market to pick a direction. Connor says, will you double or triple your stop loss size? So yes, I use a visual assessment. So let's say we do get like a big drop down and then a nice flag on the pound and US dollar. I usually go in with a 20 pip stop loss. Let me see how it looks. It looks decent. It looks decent. But if you want to be safe, you could put it to maybe 30, have a bit more leeway, have a bit more of a safe zone. Okay, so it's up to you. I would use a visual assessment. They have some guidelines, general guidelines. For example, the dollar pairs, Euro US dollar, Aussie US dollar, I like to stick to 10 pips. JPY pairs, I like to stick to 15 pips. pound US dollar, 15 pips for some entries, 20 pips for flags. But again, if the volatility is high on any of those currencies, I will extend the stop loss. Connor J says, look at the euro and the US dollar, 12 pips is tiny. Yeah, I would go to 20. I would go to 20. So if we get, I don't know, let's say we get a large push up and a flag, my usual 10 pips is going to be tiny. I would go to 20. So Charles says stop loss in pips directly affects the lot size. Yeah, it does. So it definitely does affect the stop size. If you are wondering how to actually calculate the position size, how I do it is, let me go back to my stream, stop this, present, share screen, window. Okay, so you go to this right here, my FX book lot size calculator. So basically you put in your euro US dollar account currency dollars, let's say 100K. You want to risk 1% per trade. You want to go in with a 20 pip stop loss. You need 5 lots. So you need to put 5 lots into MetaTrader. You want to go in with a 10 pip stop loss. You need to go in with 10 lots. Okay. So you need to put in twice the lots if you go in with twice 2 times smaller stop loss size. But this calculator takes care of everything. Okay, let's get back to our trading view. Present, share, window, boom. Okay. So I would just extend the stop loss. I mean, why not? If there is a super duper crazy high probability opportunity, it's worth taking it, and the stop loss won't keep me out. I used to have it in my plan that when my fixed stop loss, let's say 10 pips, was too small, I would just avoid taking the trade. But that was quite silly because I read the price action and it would have been a winner if I just gotten in with a bigger stop loss. So now I decided to just extend the stop loss. Getting back to the pound. It's going to go on the watch list. For me, this is actually printing a bullish signal. Just the technicals are printing a bullish signal for me personally. The reason is we have broken this major low, retraced. See, it's kind of a sweep. If you go to the 4-hour, it is a liquidity sweep, right? Swept the lows. That's a bullish sign. Then small descending channel. That's another bullish pattern. So if the price can go up, show me a nice buy setup. I'm not trading the reversal. If I was trading the reversal's entry setup on this pair, this would have been maybe, I don't think I would take it, but this would be interesting. What I am looking for is a large impulse up and then a buy setup, okay? That is what the probabilities are telling me is the most likely thing to happen. Again, doesn't have to happen, but I'm seeing 2 bullish confluences. So if the price does go up, I'll look for buy setups. If we decide to drop, I would need a really big push, and then I would be looking for sell setups. I would be counting on the follow through or the continuation of this momentum right here. Now, I am, of course, going to be patient because of this thing, the Fed interest rate decision. Like if the setup is approaching the news event, let's say if we are dropping and then right before the news event, the entry happens, I'm going to be careful. I'm going to be careful because this is a pretty volatile news event. So, and of course, these 7 days have been pretty volatile. Look, so the market is not super efficient. It is pretty efficient, especially nowadays with computers and everything. But it is not 100% efficient. And sometimes it does take some time for the market to really grasp all of the news events, to really price in all of the news events, and to pick a direction as well. So until that happens, it is best for swing traders to remain patient. If you're a scalper, then it's a bit of a different story. But if you're a swing trader, it's kind of better to be more patient and wait for the market to pick a direction like it did, for example. Okay, this is not a good example, but Aussie US dollar, like it did here. See, it just picked a downtrend and then it just started crashing down, crashing down, crashing down for quite a while. How many days was this? 28 days, quite a while. So pound US dollar, it's going on the watch list because I am seeing better price action than, let's say, the Aussie US dollar. I am seeing some patterns, some interesting patterns. The next one on the list is going to be the New Zealand Japanese yen. So this one was also interesting because of the V reversal. So we had the V, which is a bullish pattern, broke up. I would have taken something like this. I think I would. I definitely would. But then we had massive selling pressure, right? Massive selling pressure. That was not good to see. That was not high probability. I definitely did not like that. And then I decided to remain more patient. From the time of the last live stream, did I take any trades? No, I personally did not. We're just really flat on the New Zealand Japanese yen, right? Nothing much is happening. We're pretty flat in the price action. And I expect, to be honest, more range-bound price action. So as I was saying at the beginning of the live stream, the fundamentals are for the JPY pairs with a Trump win and a Trump sweep, so a Republican sweep of the Senate and the Congress, I believe. JPY weakness is expected, so EJ or NJ might go up. That's just a little bit of fundamentals. At least that is what the experts say. So this may happen, but until it happens, for me as a technical trader, until we get the signature, until we get that large push up, I can't do anything. My hands are tied. I need to be patient. This pair is not going to go on the watch list because I kind of forecast more range-bound price action just by looking at the technicals. So I am expecting more range-bound price action, unfortunately. That is why we trade multiple pairs. Some of them are sleepy, others are active. When the dollar is sleepy, JPY can be active. When the JPY is sleepy, the euro is maybe active. So I think it's really good to trade a lot of instruments, right? So I know guys that just focus on the euro and US dollar, for example, the Euro Trader on Twitter, but it's not really the most optimal way to trade. Most successful traders that I know trade a ton of instruments. They trade currencies, stocks, gold, commodities, everything under the sun if it's moving. So if it's trending, they are trading it. And it gives you a lot more opportunities. It makes your percentage more consistent throughout the months. So I currently trade 6 currency pairs, looking to expand, definitely looking to expand to make the percentage more consistent throughout the months. So my goal is not to make more percentage. I'm pretty happy with the percentage I'm making year on year currently. I just want to make it more steady throughout the months to attract investors potentially, because investors want to see consistency. They're not that hung up on massive returns. Like, they don't expect you to make 60% every single year, but they don't like big drawdowns. They don't like 20% drawdowns, and they don't like having 6 or 8 months of dry periods. Or basically they don't like dry periods. They like consistent small percentage month on month or quarter on quarter. That's going to be my main aim going into 2025. Okay, that's going to be my main aim. That means expanding the number of instruments that I trade. Probably going to add in more currencies. I did test the S&P 500 and gold. Haven't found a lot of success, but in currencies I can see potential, because currencies are my thing. They all move pretty similarly, and you can definitely add in let's say GJ, USD JPY, CHF, so the Swiss franc. You can add in a lot of stuff. That is it for the things I trade live. Now I want to cover some things that are pretty popular. They're moving. They have had a big reaction off of the news from the election, a big reaction. First one is going to be the S&P. So I want to do the daily chart, then go to the 1 hour. Mama Bucket FX says, yesterday I said market is pro-Trump. Actually, this is what I meant. The dollar index pumps and stock markets of many countries pumped today. They definitely did. I think the Trump victory was kind of expected from the markets. Maybe it was a little bit priced in, at least. I think the markets expected Trump to win rather than Kamala, but it was a pretty tight race before, of course, the votes, because the voting showed that Trump was an absolute clear winner of the election. But again, the S&P just had a massive push up on the reaction of the election, plus 3.6%. It's pretty big. When were the elections? Here. Okay. So yeah, massive pump up, broke the major high, just going up, currently printing a bullish pattern, which is the V reversal. I don't see any signs of stopping. I think the stock market loves or likes Trump more than Democrats, so that's a good thing for the stock market. One thing though, the statistics did show that the stock market likes when the House is split. So when the president is Republican, but the Senate, for example, is Democrat, or that's at least what I read online. The stock market doesn't like when the president is from the same party as, let's say, the Senate or the Congress, because that means that there may be some radical changes, because the president will have a easier time of implementing changes. So there might be some radical changes which the stock market will not expect, and they bring uncertainty. And something that the stock market doesn't like is uncertainty. The stock market likes certainty. It likes safe, let's say, safe scenarios, risk-on scenarios. It doesn't like when there is an unknown factor. And when having a Republican president and a Republican sweep, so Congress and Senate, that brings uncertainty and may make the stock market less bullish overall than if, let's say, Trump won and the Democrats that there was no sweep and Trump win. If that makes sense. If it doesn't make sense, I suggest reading about it online, because I'm not the expert on elections. Going back to the S&P 500, definitely bullish in a major uptrend, looking very nice. Zooming in, 1 hour chart, this is very pretty. I really like this chart. I would be trading this all day if I was trading the S&P 500. Here's a flag forming, or actually, sorry, a flag formed. It would be a loss. First high, first low, second high, second low. Whoop. Blue candle is the entry candle. Would be a loss, unfortunately, but this is the kind of price action that I hunt. So if we can get this sort of price action on the 1 hour chart on some of the Forex pairs, that would be amazing. And I would be first looking for a trade, for a continuation trade here to retest this high. That would be my first play. Second play would be looking for a buy setup right here, break and retest, and then here for a flag. I would have taken this flag. This looks pretty good if it happened on, let's say, the euro and the US dollar. Main conclusion, stock market is bullish. It's looking great. NASDAQ, tech stocks looking great, looking bullish. Daily chart almost breaking this major high. Okay, almost breaking it. Definitely showing a lot of bullish pressure. The 1 hour is looking pretty bullish, pretty great on the 1 hour. Okay, Charles says, is it better in general to just use large stop losses like with the S&P? Well, depends on what you're trading. You cannot make a general conclusion. Making general conclusions is very dangerous, in my opinion. everything needs to be tested. But from my testing, I know that the Forex pairs work better with a stop loss that is from the range of 10 pips to 20 pips. But the S&P works better with a stop loss in the range of, let's say, let's try 30, kind of 40, 50 pips. Okay, so the S&P definitely likes for you to have, or you will be better off if you have a bigger stop loss somewhere in the 30 to 50 pip range, because it moves a bit differently. I would definitely not make a general rule, as everything needs to be tested, and there is a clear difference between Forex, how Forex moves, and stocks, how stocks moves, how the S&P moves. I would have a smaller stop loss on Forex. I would have a bigger stop loss on the S&P. That would improve the win rate. So yeah, I would use larger stop losses with the S&P, for example. Mama Bucket FX asks, usually who loses money in the market except the retail traders? Well, sometimes professionals lose money as well. I think that there's quite a few people, or not quite a few people, there is very few people, very few professional traders who have a win rate that is above 60%. I think most professional traders, like the real deal, the guys that have an extremely good trading edge, they have a win rate of around 60%. That means they lose 40% of the time. That means they lose in the markets. So it's all about, it's not about the win rate. It's about when you lose small, but when you win big. Okay. Trend traders, at least, right? So you wanna, when you win, you wanna have 3-1, 5-1, 8-1, 10-1. You're gonna have a win rate of 20 to 30%, but hey, that's trend trading. That is how it goes. So everyone loses in the market. Professionals lose in the market. Institutional money loses in the market. But when they lose small. When they win big. Okay, hope that clears things up. Okay, then we have gold. Mama Bucket FX says, no, I mean like except for individuals in general. Yeah, I'm not sure what you mean exactly. If you could explain it a bit more, I don't really understand your question. Like companies, you think, do companies lose money in the markets? Yeah, I don't really understand what you're asking. But gold, the daily sell-off. Okay, so this is kind of expected. What I learned from Trader Nick, shout out to Trader Nick, is before the election, as we are approaching election, metals like gold, which is a safe haven, pump up. Okay, they pump up because it is unexpected who will win. It is unexpected, or it is not, let's say, not a clear-cut case of if the power will be handed over without any issues. Sometimes you could have a riot. Sometimes you could have something that's even worse. So because people don't feel 100% certain about who will be the president or if the power will be given without any issues, they buy safe haven assets, they buy gold. That is why right before elections, price goes up. And then when the election happens, if everything goes as planned, if there's a new candidate, if the power is handed over without issues, then they go from risk off to risk on. So they go from safe haven assets such as gold into the stock market. That means metals go down, gold goes down, it's a sell-off, S&P goes up, right? Because people feel safer about their decision, people feel more inclined to take on risk. That is exactly what you're seeing right now. Gold going down, S&P going up. Money goes from here into here, right? And this is a pretty big bearish candle, pretty big sell-off. I would kind of expect more downside price action, okay? I would expect more downside price action because this is pretty big, depending on how this daily candle closes. 1 hour chart is going to look pretty bearish, I'm guessing. Are there any high probability plays? Yeah, potentially a flag here, but nothing that high probability. I'm definitely seeing a big crash on the 1 hour chart. That is to be expected, a big crash on the 1 hour chart. That is also a trading edge you can play, right? If you backtest this thing for the last 4 elections, you would probably notice that before the elections, price goes up. After elections, price goes down. So maybe after elections, you could sell gold, you could buy the S&P, and I think maybe 8 out of 10 times you would make money. 8 out of 10 election times you could make money. Just an example of building a trading edge. Silver selling off as well. Yeah. Okay, silver is selling off. It doesn't look as good as gold. But my main conclusion for metals, this has been a pretty big uptrend, pretty steady, pretty large, pretty strong uptrend. So possibly we are due for a bit of a bigger correction. That is what I'm expecting. A bit of a bigger correction right here. Okay. So downside, I'm actually expecting downside on gold. That is what the technicals are showing me as well. There's a clear shift in momentum. Now, I would say the most interesting chart for me personally today with the S&P, I think the S&P is number 1, but number 2 is going to be Bitcoin. Because we have broken out of the major high by 2.17%. The new all-time high is at 75,360. That is the all-time high. Okay. Pretty bullish case for crypto. Why did this happen? Well, it is well known that the Trump administration is more bullish on crypto than the Harris administration. Republicans are more bullish on crypto than the Democrats. Why? Usually with Republicans, you get less regulation. Also, Trump has been talking about crypto a little bit in his campaign. Kamala mentioned nothing about crypto. So a bullish scenario here was expected with a Trump win. This is great news for Bitcoin, for crypto holders as well. To be honest, I was pretty bearish on crypto and on Bitcoin. I'm kind of a hater. That's because I lost money in crypto. So it's still a bitter taste. But of course, the traders that can keep a level head usually do much better than traders like me who kind of don't like crypto. I'm starting to like it again, though. So what I do like is that we have broken out of this major high, now at all-time highs. I do like this for a more long-term play. So I would like to invest in crypto at this level. If the daily candle can close like this, the next one, if it can have a bullish close, possibly I'm going to buy. Okay, I'm not going to do it on my MetaTrader. I don't think that's smart for a long-term play. I'm going to do it for Binance and then put it on a hard wallet, cold storage, or whatever the name is. You do not want to keep any crypto on a Binance exchange or any exchange. You want to put it in cold storage on that USB thing, that USB wallet. What is the name? Ledger wallet. So if we can get a nice bullish reading, a nice bullish daily candle, that would be a big incentive for me to buy. Why? In my experience, when Bitcoin makes a new high after some period of stagnation, what is this? 236 days. When it breaks out, and it just goes up. It just rockets up, maybe targets 80K, 100K. See? Okay, here we haven't broken out that much, but look at these lower levels. There was just a massive pump to the upside, massive pump to the upside. I think that's worth the risk. I think it's worth holding some crypto. Something that my friend Nico suggests, also Griff as well. Both of them hold some crypto. Both of them hold some S&P as well. So what you can do if you have a broker with 1 to 100 leverage, right? I don't. That's too bad. I have 1 to 30 because I'm in stupid European Union. But if you have access to IC Markets Global, you can get 1 to 100 leverage. And if you have $10,000 as your savings, you can put 50% of that into IC Markets. You could put 35 into the S&P, and you can put 15% into crypto. Okay, I think that's a pretty good investment strategy. So, and you have 1 to 100 leverage, so you can risk a lot on your IC markets account. You're not limited, and you can still put in 1% risk of those $10,000 that you have overall, right? Because you have a lot of leverage, you can use a lot of money. You don't have to put in the whole $10,000 into the account, which I have. I have to do it. I have to put in all 10K because I'm with 1 to 30 leverage with IC markets. But again, if you have a broker 1 to 100 leverage, put in 5K in the broker and then risk 1% per trade. Basically, 1% per trade. Put in 3,500 in the S&P and put in 1,500 in Bitcoin. That's a pretty safe play. As you keep getting revenue, as you keep getting salaries or income from your business, keep topping up those accounts. I think that's a pretty solid investment strategy. And it has currently brought a lot of success to my friends Griff and Nico from Zentum Trading. They made a lot of money from crypto and from the S&P. So Mama Bucket FX says, I mean institutions, companies, and banks of all the countries. Is it a tug of war, or does someone lose money often? I mean, like, except for retail traders, be it elite ones or fresh ones. So always, for someone to make money, another person needs to lose money. It is a zero-sum game. No money is created out of the sky. The only people that create money out of the sky is the Fed, because they print money from nothing. But banks are not like, that's the Fed. They can print money. No one else can do it. So for you as an individual or as a bank, for you to make money, someone in the markets must lose money. So yes, there are definitely institutions, companies, and banks that lose money. Remember the 2008 crisis? Some banks went under. They made some bad trades. They made some bad deals. There were a couple of other examples, and they went bankrupt, right? So institutions, companies, and banks can definitely lose money in trading. Look, retail trading is just a small part of Forex. It's like, I don't know, maybe 1 or 3%, something like that. The really, really small part of Forex trading is the retail market. The majority is the big institutions, big companies, big banks, and guess what? They lose money as well. You have traders at the big companies, you have traders at the big banks, you have the traders at the big institutions. Traders are human. Sometimes they make mistakes and then they lose money, like we had in 2008 when they made a lot of mistakes and they lost a lot of money, and the companies went bankrupt and the banks went under, and it was a shit show. So continuing with the analysis, hope that clears it up. If it doesn't, you can put it in the chat. Ethereum is not really catching up to Bitcoin, which is kind of a sad story. Let me just see Bitcoin on the 1 hour. Yeah, just a massive spike up. So Ethereum is not really catching up to Bitcoin. It is still quite far away from the all-time high. So 35% from the all-time high. Not the best story, but usually altcoins need a couple of days, weeks, months to catch up to Bitcoin. Is it going to happen? We will see. But Bitcoin looks so much better, so much better than Ethereum. DXY, massive print up. We have been just crushing to the upside from, what is this, 30th of September, just huge push up. It looks like it's continuing, so dollar strength is continuing up. Not a lot of signs of stopping. We have some bearish candles printing, but it's really not that significant. Price is just exploding up. Technicals are telling me this may continue. We do have this big thing, which is the Fed interest rate decision. It has a big impact. But if the Fed interest rate decision comes bullish for the dollar, I would just expect this. I would expect the DXY to go up. This chart represents the strength of the US dollar. I would expect this to go up. That means all of our dollar pairs will trend down. Okay, that means a massive drop on all of our dollar pairs, which is awesome. That's amazing for me as a trend trader. I just want the markets to go up or to go down, and I'm going to make money. I don't like for the markets to go flat. When they go flat, I make maybe a little bit of percentage with the liquidity sweep entry, but I much prefer for them to go up or down. So this is a good story. It should be good for us as trend traders. US oil, doing pretty much nothing. Yeah, I mean just nothing. On the 1 hour chart, let me see. The elections were here. Yeah, just nothing, kind of ranging around in this area. Was there a big move? There was a little bit of a move. I don't like analyzing US oil. It's just not for me. I don't find much success in analysis of US oil. The daily chart looks crappy as hell. Just looks so choppy, so many gaps, so wicky as well. So US oil for me as a technical trader on the daily chart is stuck in this range, and I don't expect much to happen. I don't know much about the fundamentals, so I cannot speak on that either, but it doesn't look like there is some action happening. We have a lot more interesting markets. For example, the S&P is so much more interesting than US oil. No worries, Mama Bucket. I'm glad that we got that resolved. So if you guys have any questions or chart requests, make sure to put them in the chat room right now. We have finished our analysis. On the watch list is going to be the S&P and Bitcoin. So the final tally for the watch list is Euro US dollar. It's printing some stuff. I have a bullish bias, to be honest. Be careful, be very careful of this Fed interest rate decision. It tends to be a volatile event. Pound US dollar, I have a bullish bias as well. We have two bullish confluences. Okay, two bullish confluences. The descending channel and the major low takeout. S&P, I just like to keep an eye on it. It's crushing up. It's looking amazing. Pretty interesting. We can put in gold as well. It's moving. Gold is, I have a bearish bias. It's kind of dropping down. This would be a perfect reversal play for my Forex pairs. So if this was the 1 hour chart, and we got this ascending channel, which is a bearish pattern, we got this drop, I would now be so happy to look for sell setups. I would be very, very excited. Okay, not excited, but this would 100% fit my plan for sell setups. So this is looking pretty bearish. And of course, Bitcoin crushing up, breaks the all-time high, just moving up. And if we can get a nice bullish print on the daily, for a longer term play, for buying Bitcoin on Binance, I think this is worth it. It's not a financial advice, but I know that when Bitcoin goes to all-time highs, that is not the time to be a seller. It's actually a pretty bullish sign, at least according to my experience. So Tom says, hi, thank you for keeping up with the stream for a handful of us. Yeah, no worries, Tom. I'm having fun. I usually had a format where I filmed just a trade recap and a forecast. That was pretty boring. I think this is much better. I get to talk to you guys. You guys get to ask questions. I get to help you a lot more than if I just filmed the video and uploaded it. So I really like this format. Thank you guys very much for watching. So with time, the streams will grow as these things usually do. But we're getting some engagement. We're getting comments. So that is great. And that would be about it. So take care, guys. Be careful of the upcoming news event tomorrow. Curious Kitty Cat says, great format. Thanks. Yeah, no worries. Thank you for watching. And I will see you guys next week, either on Wednesday or on Thursday. I still have to decide, depending on the action or the news that we get, news events. It will either be on Wednesday or on Thursday. So good luck in the markets. Hopefully we get some trends. Very interesting US elections, and see you guys in the next video.